So let's continue with our credit reports and scores presentation. Remember that you are referencing Isabella's story, but most of all her credit report as we continue to go on, and that is on these pages in Moodle. You can print them if that makes it easier for you, but we're referring to these different sections. So we've already talked about her personal information, which is right here on that last page. We've talked about her collection agency reporting. We've talked about Sam's electronic world, that's right here. The public record information is right here. And so we'll continue to talk about that as we continue into our presentation. So who reports to the credit reporting agencies? How do you get your score? It is depository institutions, credit card companies, mortgage and finance companies, and retail stores that have credit accounts, like if you get a store card for Target or something like that. These lenders report all information, positive and negative. So if you're paying your bills on time, that's reported, and if you're late, that's reported as well. What type of lenders have reported about Isabella? You can go back again and look into her report. You can pause this presentation and check that out to see all the different lenders who have reported. Other types of data furnishers who report to the credit reporting agencies: landlords, cell phone companies, utility accounts, and medical providers. And these only report negative information. So credit reporting agencies are encouraging regular payment information to be reported to help consumers build a positive credit history. But right now, these ones only report if negative. So if her cell phone is on there, the TalkTalk provider, that means that something is late. Otherwise, it wouldn't be on there. Same thing with these other types of accounts. What is not in your credit report? Any medical information, anything you've been treated for, your race and your gender, your religion, your non-credit depository institution account, so like a savings account would not be on there, how much you have in there, your criminal background, and your buying habits. None of those are on a credit report. Credit reports are focused mainly on you paying your loans and debt and bills on time, and those are the things that will show up. Your present self impacts your future self. So some items remain on your credit report longer than others. Good accounts or accounts in good standing are always on your credit report. So it's important to have accounts that have always been paid off and paid in full. If you close an account and it's in good standing, it stays on for 10 years. If you have a late or missed payment, it stays on there for 7 years. 7 to 10 years is also public record information. And 2 years is inquiries, so that means people who ask for your credit information. So you'll see these numbers again. These are the length of time, how long things are on your credit report. Your credit score now is a mathematical number created to help evaluate the risk with lending and consumer money. It reflects information in the entire credit report at a particular point in time. It's a numeric grade of a consumer's financial reliability. I'm sure you've heard about credit scores, whether it's through commercials or online or anything like that. FICO score is the one we're mainly going to talk about, but there are other credit scores. FICO score ranges from 300 to 850. Vantage score is 501 to 990. And you want to be as high as you can. The higher your score, the better your rates will be if you borrow money or anything like that. A higher score means that it's a higher chance that you're going to repay the money that you owe. And it's calculated in different ways. There's certain percents that make up the number and that sort of thing. But if you pay your bills in full on time, you should be able to increase your credit score. Your history helps a lender determine the type of credit to grant. So look at these examples. If you have a credit score of $730, you may qualify for a 6.16% interest rate, which makes a monthly payment of $457. Now drop your FICO score a little bit. The interest rate goes up, you pay more per month, and the total amount you pay over 3 years goes up. And dropping it even more, you can see how big the interest rate goes up and the monthly payment. And then your 3-year amount is well over $2,000 more just in interest in 3 years. So it's really, really important to get your score as high as you can so that you qualify for the lowest rates that you can. That's less interest you have to pay back. Like I said, over $2,000 can be saved over the lifetime of this loan because of a good credit score. It affects more than credit. Your insurance rates are affected, some employment opportunities, public utility services and housing your credit history can affect all of these. Maybe someone won't rent to you because you haven't had a history of paying back. Your credit score is low. Examples of Isabella's credit history is affecting her financial well-being. Think about all the opportunities and things that she wants to have and what she's done in the past. So positive credit history equals a higher credit score. These are the things you can do: pay your bills consistently and on time, maintain reasonable amounts of available credit. It means you don't have a store credit card for every single store that you go to. Apply for credit sparingly. Videos in class, sometimes they show students who apply for credit cards so they can get a free water bottle or some other kind of free merchandise, maybe a t-shirt. And by doing that, you're opening another line of credit, which again, if you do too many, it's going to lower your score. Have a mix of different types of credit, so closed and open end, like we've talked about before. Don't have too many of one type of account, and check your credit report annually, and you can do that free every year. So how can you build credit? You can get a small closed-end loan from a bank or credit union and set up automatic payments. It can be a very small loan, and it can just to start to build your credit so that you have some things. This is something you could do now. You could be a co-signer on your parents' credit card, someone equally responsible for paying back the debt. And then if you wouldn't pay that credit card back, your parents would be held responsible. So you wouldn't want to lower their credit score. So you'd want to make sure you're responsible with that. A secured credit card requires a cash security deposit, and so that ensures the credit card company will be paid no matter what if you don't pay. And then being an authorized user on a credit card, maybe some of you already are authorized users, you're not legally responsible for the debt, but you can start building your credit history. So these are all ways that you can start as soon as you can to start building your credit, making it positive. Having no credit history, I think I've mentioned this before, can be just as challenging to a consumer as having a negative one, because you may not be allowed to get a loan or something that you need because they don't know if you'll pay them back or not. How can you request a credit report? You get one free one every year from each of the 3 credit reporting agencies. Remember, those are Experian, Equifax, and TransUnion. It's important to request your report even if you haven't used credit, so you can make sure nobody else has used your Social Security number or anything to start using credit. And if you're denied credit, you get a free copy within 60 days. Annualcreditreport.com is the only government-sponsored free website. You maybe have heard of Credit Karma, freecreditreport.com. Those are all agencies that it's up to you if you want to research and use them. I have not, but Annual Credit Report is free from the government, and it allows you to check your credit report. Since you can report from each of the 3 agencies, you could actually do 3 a year. You can do one in January, one in May, and one in September, or something like that, one from each Experian, Equifax, and TransUnion. So you could technically get your report more than once a year. Usually your credit score that you have to order separately, that number, and that might cost a fee. The 3 credit reporting agencies are the primary source, and the scores may be a bit different between each one, but they'll be in the general same range. However, you don't need to know that number unless there's a reason for that. But as long as you check your report and make sure everything's accurate, that's the most important thing to do. If you find an error, you'll contact the credit reporting agency and company and provide the incorrect information. They have 30 days to investigate, and if the error is found, the correct information must be provided to all 3 credit reporting agencies. If the dispute is not resolved, consumers may add a dispute statement to their report. So if you look in Isabella's personal statement section, you can find out more about her. I believe that's on the last page or the second to last page. There are credit repair agencies out there, and they offer to help you fix your negative credit. But according to Better Business Bureau and the Federal Trade Commission, consumers can do just as good a job repairing their credit reports as paying someone to do that for you. So be careful of companies that promise to help you instantly, because there's not an immediate fix for negative credit. If you have a lower score, it's going to take time to build it up again. And it is possible, and there are ways to do it faster, but you can do it on your own. You don't have to pay someone to do it for you. So if we look at Talitha and Brendan's advice, and we look back at her story and some of the advice that they gave them, was it good advice or not good advice? Talitha said credit ratings improve as people get older and earn more. It could happen, but is that always true? Doesn't have to be. Isabella's credit score will improve as soon as she settles her delinquent accounts and gets a better interest rate on existing loans. And are those true? We know that settling your delinquent accounts is going to help your score, paying off your traffic ticket or anything like that. Are you going to be able to get a better interest rate on a loan until you raise your score? You're going to probably have to raise your score first. Brendan says shopping around for too much credit is not good, and that's a correct statement. Opening new accounts, even if not used, provides evidence of credit worthiness, and this would not be a correct statement. By opening new accounts, you're opening more lines of credit. It's not showing positive for you. Both of them said to close old accounts, including those with loans not paid on time, to wipe the slate clean. And you'd want to make sure everything's paid off before you close anything, because those closed accounts will stay on record. Paying someone else to fix your credit, we just said, is not necessarily a good idea. So 3 pieces of advice for Isabella: pay her Sam's Electronic World card, settle her traffic ticket, create and use a spending plan so not to rely so heavily on credit, not have to use her credit card so often. Setting up automatic payments is a great idea so that you're never late. And you can call your school loan agency. You can call and say, I'm struggling with making payments. What can I do? And they may work with you, and usually they will. It's worth asking always. And pay down your credit card balance by paying more than the minimum. Pay as much as you can, because usually those have the highest interest rates. Continue to monitor her credit reports. These are all great advice for Isabella. And then also talk to her friends and make sure they understand what she learned, so they can educate others with correct information. So in summary, your credit history is used to assess your financial risk. Your credit score helps lenders to make more objective lending decisions and to develop a positive credit history. Manage your money responsibly. Your present self impacts your future self. What you do now will impact your future.